Good day, guys. Welcome to Trading Arbitrage Opportunities with Calvin Ports. Uh, Today I have another a long-awaited trade that I've been looking at. Uh, the trade went in the direction that we were looking for. It's a huge trade actually. It's not the smallest trade that we would be looking at. So I'll be telling you about this actual trade that we're going to be talking about right now. Let's jump into the fundamentals in the trade, what we're anticipating, what our economic projections are. So this is Canada. Let me show you. This is CAD JPY that we're looking at. Let's get back into the fundamentals. This is Canada. The inflation here, our intentions were that we would get an inflation that is between 2.3% and 2.6% for us to believe that the interest rate cut cycle is over. Remember, for us to have what I call the boom bust processes, where a currency is supposed to break out of a recession fundamentally. I will show you let me show you in terms of price action what I mean by out of a recession. All of this was created by a recession. The currency was moving in an uptrend by itself without any issues. So all of this was created by a recession. So for us to be able to jump out of a recession, two things need to happen. First of all, we need to break below the previous low, which is this low, and this low, or we need a visible uh, break below where we can believe that this is actually a spring. You know, a break below that is like like this, where it is visible that everybody else can see that all of these lows were broken with a visible low, or we can get these these tiny micro breaks where we can see that this low was broken. Let's try to make it visible. This low was broken by this low. So it was something like this, was broken by this low. And this tiny low was also broken. Yeah, was also broken here. You can see that it was broken. And after these lows being taken out, what is important is that we break uh, the nearest low above the nearest high above the other highs, which is this high. And after breaking both lows and highs, this creates what we call volume, because a lot of investors have lost money here trying to buy the market, and they were taken out before the market gave us this this move higher. So that's what made us believe that this is a valid order block. For those who talk about order blocks, this is a valid order block. Most of the time when I do these kinds of trades, I don't draw order blocks. You just see these lines that I have. These lines are just showing the previous lows that were taken before the market reversed. So These are the actual order blocks, but I don't draw order blocks because what I want to see is the volume in price action, the volume taking out lows and highs. So a lot of people talk about volume that is down here. It's difficult for me to read that volume because it spikes all the time, and I don't understand exactly what's happening with that volume. It might spike on, I don't know how it works. So a lot of people know how to use it. I don't know how to use it. This is how I observe volume. My intention is that I need to see the lows being taken out before the market pumps higher and breaks at least one low that is visible in this way, and the market drops. So normally when we have a drop, base drop, what I expect is that this level becomes a flip zone in terms of price action. So it becomes a flip zone because this is a drop, base, drop. A drop base drop is like when the market drops and then it starts to move sideways and then it drops again. So it's a drop base drop. So that becomes the flip zone. It makes me believe that this is the 50% fee. That's why we call it a 50% fee because that's where the market flips. So I want to see this thing before I believe whether this drawing is correct because it was supposed to be up here, but because of this flip zone, I had to drop it lower. So these are just some of the things that I look at in terms of price action. But I'm not really that good in price action. I don't believe in price action. I just work on what I have. For example, uh, the economic divergence between the Canadian dollar and the JPY is so wide that there's a high possibility that the market may not even get to the 23.6. This 23.6. This is the 50% fee. So it may not even get to the 23.6. It might reverse somewhere up here and move higher. So these guys may not even get touched. So I'll be monitoring this trade and I'll tell you why I believe there's a high possibility. Uh, what makes me believe that this might be an exit out of a recession, but I okay, an exit out of the recession would be something like this, but I'm not expecting, I don't believe that the CAD is ready to get out of this recession. We might get a bit higher and just for the market to drop lower. So at the moment, I don't believe in the CAD getting completely out of the recession. But the volume here in terms of price action is telling me that we're getting out of the recession. So this is what I call the major bust in macroeconomics. Let's go back to macroeconomics. Macroeconomics. So a major bust is when an economy moves out of the recession. And what I do is that I hold long positions in that currency. So what would make me believe that let me show you the GDP. The GDP is telling me that it was supposed to be at 2.8%, but it's lurking down here 2.2, 2.3. So there's a high possibility that we might get a bit lower in GDP. Why? Because these guys are not convincing. They were supposed to be at 2.6, 2.3, but now they're down here at 1.7, 1.7, 1.9, 1.7. So that these are the reasons why I don't believe that the CAD is ready to give us a major bust out of this recession. I believe, okay, it might look like it's exiting a recession, just because the JPY economy is collapsing. So the only thing that will make the economy collapse is because the JPY is not doing well, but that does not mean that the CAD is out of the recession. The CAD is still collapsing actually. So in terms of the GDP, I'm not convinced that the cat is out of recession. In terms of inflation, I'm not getting that the points that I was supposed to be getting up here, they're all down here. And the GDP was supposed to be giving me 2.8 and above, and they're playing around here. So there's a high possibility that we might get a bit lower, and there's a high possibility that the banks are going to be convinced to take another interest rate cut. And those are the reasons why I don't believe in the CAD economy coming out of the recession. Yes, they held interest rate. This was the last interest rate cut in March 12th, and they held April 16th. They held May 31, June the 4th, July the 30th. The next time we do interest rate cut releases, I believe that we're gonna the next time we get a news release on interest rates, I believe that we'll get an interest rate cut. So, bullish reasons. The reason why I'm going bullish on the CAD is because the Bank of Canada held its benchmark interest rates unchanged at 2.75. So these are bullish signals. Those are the reasons why I'm doing that. So I'm I will be able to hold a long position based on Canada's trade balance. They have a trade surplus from from the other month to the previous month here. So I'm gonna be buying the previous month. We had a bit lower on this current month. So don't look at the dates here. Those dates are not working. So I'm gonna be buying this bit higher, or the one written May. I'm gonna be buying this, but this one I'm not gonna be buying. I'm gonna be selling the CAD. Part of the reason why I believe that the CAD will be dropping a little bit, giving us a bullish move higher up here. I believe that I believe that this is what I will see, something like this, and only for the market to move higher, move lower, so that we can actually get out of the recession. This is what I'm thinking. I don't think we're going to be moving higher by ourselves. I believe that we might be buying something like this just for the market to drop. However, if the JPY continues to deteriorate, then we might get to the points that we're looking at. But for now, I'm not convinced. There's a high possibility that the market will turn around at this current order block here. So, and these are signals that are not convincing in what I call getting out of a recession, this major bust that I'm talking about. If I keep getting these, then if it gets bullish from here and it moves higher up there, then I believe that when it comes back, it might stop us out. But at the same time, because the JPY is not doing well, even if it turns around here, I believe it might be getting out. But that is just a bullish signal based on one currency, which is the JPY. But the cat is not out of a recession. I'm not trading a major bust on the cat. So the unemployment remains at 6.9%, which is still a bullish signal. It's still a bullish signal. So I'm going to be buying it for now, but getting out of a recession is not something that will be happening. So I'm going to be monitoring this trade, and probably we might get. So the dates are between the 5th of September and the 20th of September. Those are the two dates where I will be willing to take risks. Besides those dates, I'm not going to be trading. I'll be observing what's happening here. Goodbye, guys. Let's see each other on the next episode.